The truth is, you only need to trade one time frame. You only need to focus on one time frame for entries. This is what everyone gets wrong about ICT concepts. Everyone thinks you need a million different concepts, a million different PD arrays, when in reality, you need to be in line with the order flow, in line with the expansion, and focusing on one time frame. Today, I'm diving even further into one time frame and what exactly you can do to better your trading. Let's not waste any time and dive into the price action here. You can see quite clearly we are on a 4-hour time frame. This is the main time frame. It is the perfect blend between the higher time frame and the lower time frame. It's the perfect blend for buyers and a perfect blend for entries. All you need to know is where is the market reaching for. If we look at this price action on the Nasdaq, you can see we are at all-time highs, as you all know. When trading at all-time highs, you are not expecting big retracements. You are not expecting the market to suddenly reverse. We are expecting price to continue pushing out sellers and increasing the price. This asset is naturally going to go higher over time. Okay, so when we are looking for buys, we are in line with a better bias. All we need now is a dealing range and anticipation of expansion. What do I mean? When we retrace here, we don't expect these lows to be taken out. Why? Because we are in a bullish market. This market quite clearly has been bullish. So any deep retracement is only a retracement to go higher. Focus on the 4-hour retracements. Dealing range low to high, retrade back into where? This fair value gap. Now, once we are inside this fair value gap, we want to look for displacement. Displacement indicates that the market is predisposed to go higher. Displacement indicates that it's going to do so now. And if we zoom in, this is why I say you need to focus on one time frame, particularly the 4-hour time frame trading the weekly expansion, but I will get into that. You can see we take a low inside of the fair value gap, then completely fill the gap and displace higher. This displacement indicates higher prices. Now remember I said wicks do the damage and bodies tell the story. You can see we trade down into this fair value gap here, consolidate inside the fair value gap. Wicks come outside it, but notice how we never take out this low. We then expand higher, but I want you guys to focus on trading the new weekly open. The 4-hour time frame works perfectly alongside the weekly open. It's perfect for that weekly expansion. In my last video, I taught how you use the weekly candles expansion to trade the 4-hour time frame. In this video, I want to do the same thing, but I want to really focus on this 4-hour time frame and really focus on the new week open. You want to long below the new week open if you are bullish. You want to short above the new week open if you are bearish. Obviously, we've just built this framework off of the 4-hour chart. The new week opens up here, Sunday, 6 p.m. New York time. This is always New York time. Buy side rests here. Why is this our buy side liquidity pool? Because it is part of this dealing range. This is the external range high. This is internal liquidity. If we are anticipating expansion, we are anticipating a draw being the external high. The external highs here are also all-time highs. So again, I mentioned at the start of this, in a market that is expanding to all-time highs, you do not want to be looking for shorts. You want to be pushing sellers out of the market. Where do we get long if we are looking to trade the 4-hour time frame? You get long below this line here. This line isn't just a line. This line is key because it is the weekly opening price. Right when this candle opens up, you have a new parameter for oversold or overbought conditions. As soon as that opens up and we are set to expand, we're set to expand where? This original consolidation. As soon as that opens up, you have a parameter for overbought or oversold. Once we trade down below this, you are looking for longs. Longs in a key level, particularly. Below this low is a key level. Old lows are key levels. If you take a look here, you also have a low from last week. So once we tag this low, created at a key time, Friday, London session, we tag the low and start to rally higher. This down close candle, once traded above, then holds for higher prices. We then also, if you zoom even further into this price action, what is this here? This is a fair value gap, right? A fair value gap that lies on the weekly open. So we have traded, consolidated around the weekly open, dipped lower, taken out sell side liquidity below the weekly open, traded higher above the last down close candle. The body of this down close candle is the sensitive part. We trade into it, trade away from it, displace, remember displacement is key, and create the fair value gap. As soon as we tap that fair value gap, you are going long. As soon as we tap that, because we have spent a lot of time around the weekly opening price, this is on the new week open, right? So this was a consolidation week. You could have got long below here. If you didn't, you don't focus on that. You focus on the new week. The new week opens up with a gap. As soon as we tap that gap, because the algorithm spent so much time around the old weekly open, the new weekly open opens up here, we tap the gap and run higher. So the context here is that we spent enough time gathering orders, absorbing liquidity around the old weekly open to use the new weekly open as propulsion to send price into not a random level, into the key buy side liquidity above here. As soon as this opens up, you are longing. We then don't take out the highs here. Fall short of the highs, retrace. Retrace into where? A fair value gap. Once again, this portion of price is unbalanced. You don't expect a deep retracement here. Why? Because we are so close to the buy side external liquidity here. So for price to come all the way back down here and completely fill in this fair value gap, it is unrealistic. We don't actually want that to happen. That would be bad for longs. We want a stab into the fair value gap to offer quick, snappy fair value before sending it into the original consolidation highs here. So again, one opportunity, the second opportunity, all on the 4-hour chart. Framing price around the weekly expansion. All of this was based off of the 4-hour chart, and it's why I say you only need one time frame. It's why I say you get confused. If you are not on one time frame, you are watching too many things. If you are focused on the daily expansion, you can just trade the 1-hour time frame. If you are focused on the weekly expansion, you can just trade the 4-hour time frame. There are certain key time frames that reveal price's true nature, one being the 4-hour, one being the 1-hour. In the next video, I will dive into the 1-hour, but right now I wanted you guys to focus on the 4-hour because I know a lot of you work. I know a lot of you have 9 to 5s and you can't spend time on the charts. The 4-hour, again, as I said at the start, is the perfect blend between the higher time frame and the lower time frame. So those of you who don't have time to be on the charts all the time, this should be your main time frame. If that weekly opening price and the weekly candle is set to expand, you're longing below that price and you are shorting above that price. With that being said, I want you guys to digest that information. I want you to go into your own 4-hour charts and find expansion. Find when we dip below the opening price, when we are predisposed to go higher, we dip below it and then rally from there. When we are predisposed to go lower, look how we rally above and then displace lower, creating fair value gaps, order blocks. After that displacement, any fair value gap, any order block, any breaker block, any PD array you all know will hold. It's the narrative of that weekly opening price. And it's why I say this is the only time frame you need. With that being said, if you guys do want to become my student today and trade with me live in New York session where I'm constantly posting my thoughts on what I'm looking for. We went 3 for 3 this week in NFP week. We went 3 for 3 on call outs and my students will vouch for that. If you want to become my student and join the Discord, learn from me privately and learn these concepts deeper, please do click the top link in my description and it will take you over to my mentorship page. We've had massive payouts this year, massive payouts in Q4 of this year in particular, and I've been diving into the actual secrets behind price inside there. So if that intrigues you, please do join below. With that being said, if you did enjoy, drop a like on the video and drop a comment letting me know what you thought about the video, if with any feedback at all. If you are new, please do subscribe and turn on post notifications so you never miss another upload. Thank you as always for watching, and I'll catch you guys in the next one.